Well, good morning, folks. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Services Division. On behalf of our Commissioner David Geragino and our staff in Taxpayer Services, our Director Elena Turner, and our Assistant Director Dan Vinson, who joins us today, we want to welcome you to today's presentation on completing the sales tax return, which is a very popular topic. We have a lot of people that are joining us live today, and I'm sure that we'll be viewing the recorded presentation as well as we post it to the website. So we'll begin here in just a moment. Certainly appreciate our hostess for the day, Miss Katie Julian. It's on here with us as well. And our special guest today from our audit division, Mr. Justin England. So welcome to all of you folks. Glad to have you on board too. I'll go ahead and turn this over to Katie now, who will explain a little bit about the mechanics of what we're going to be doing here for the next little bit, and to explain how you can interact with us as we do the presentation today. Katie?
Great. Thanks, Billy, and special thanks to Justin for joining us today. We're always excited to have an auditor on these webinars. It's great to get your perspective. You'll see in the chat, we have the chat closed right now until we get to some time at the end of the webinar to take questions where you'll be able to chat directly with the panel, and we'll answer as many of those as we can get to. But you'll see in the chat that there is a link over to a PDF. There are some slides on this PowerPoint that are, you've got to zoom into the PowerPoint. If you know how to do that in WebEx, great. But if you wanted to actually be able to zoom in on a PDF, you can do that on the PDF that is there, that there's a link to. And also there's a link to the paper application and the paper instructions. Of course, filing, electronic filing is required, but sometimes it's helpful just to see it written out on paper the old-fashioned way, right? As Billy mentioned in the chat, we will have a recording of this posted to our webinar video library either later today or tomorrow, so you can refer back to it as a resource. We are going to be talking about completing the sales tax return. As Billy mentioned, this is a very popular topic. A lot of businesses collect and remit sales tax in this state. So do want to mention that this information being presented is for tax periods beginning on or after July 1, 2023. This is a topic that we actually have had a previous webinar about a few years ago and are redoing the webinar because a lot of things have changed. Each year, the Tennessee General Assembly passes laws that affect sales tax just about every year. Since the last time we had a webinar about this, I think some stuff's already even changed back to the way it was, like vendor compensation. So we'll talk a little bit more about that later. But we are going to be discussing today a brief bit about sales tax law, kind of an overview, and showing you some resources to find more information about that. But we're really going to be focusing in on the return details. We're not going to talk about every single line. There are lots of lines in the sales tax return that apply to such a small amount of people, maybe even with the hundreds of people we have in here today, that maybe some lines that don't apply to anyone even in here. So we're going to talk about the big stuff, the main stuff, and then resources to find information about all of it. Like I said, at the end, if we've got time, depending on how chatty I get, we'll take some questions in the chat. We'll open that up later. All right, so this is a slide that we use often just to give an overall, it's like basically a 10-hour session on one slide. It's the basics of sales tax, though. I do want to say also that use tax is a counterpart to sales tax. We have a separate consumer use tax return that we're not going to be talking about today. We've discussed having a webinar about that topic in the future, but really we're just going to be talking about the actual sales tax part, the sales tax return. So basically, in a nutshell, sales tax applies to dealers engaged in the business of making sales of taxable products and services in Tennessee. Those retailers and dealers are responsible for collecting that tax from the consumers and then remitting it on a sales tax return. So right there in the middle, sales of tangible personal property are taxable in Tennessee unless they are specifically exempted by the law. Sales are exempt if the purchase is made by an exempt entity, the product is exempt, or the usage is exempt. Services, on the other hand, are generally not taxable unless the law specifically says that that service is taxable, or if the service is part of the sale price of tangible personal property. We've got more information about that in our manual, and also there's a specific webinar dedicated to services subject to sales tax. Hey, Billy.
Yeah, I was going to just bring up one small thing there, and I think what you said was exactly right. That second line bold towards the top, retailers are responsible for the tax, and that is true. So under Tennessee law, we use the term dealer, by the way. So dealers are responsible for registering your business correctly for all taxes, including sales tax, and the tax responsibility is on the dealer. So regardless of whether you collect the tax from the consumer or not, you're still on the hook for the tax. So sometimes we get that question saying, I forgot to collect sales tax. Well, that's not great because you still have to actually remit that tax to us because it's a requirement of law. So I just thought I would bring that up. So just be real careful about that, especially if you're a new person registering a business and it's a new business in Tennessee and you want to make sure you get all your registration stuff right. Okay, thanks.
Yeah, Billy, interesting that you mentioned that. There's a local shop that I frequent in my area, and I just got a message, a little text message recently that said that they're coming up, there's a sales tax-free weekend. And I'm like, oh, okay, well, that means that I may not be, as the consumer going in there and buying products, I won't be paying sales tax, but that the business is still going to be responsible for remitting sales tax that would be owed on the gross sales that they have. So generally, there's a state rate and a local rate, and that's the total sales tax. There are some special rates, and the return reflects that, such as on food, digital products, single articles. That's a whole nother ballgame. But for more information about sales tax law, I'm going to refer you to our sales tax manual and other webinars that we have specific about sales tax, and I'll show you those resources here in a little while. Filing of sales tax. Sales tax is due on the 20th day of the month following the period. So for monthly filers, which most people are set up as a monthly filer, the sales tax return is going to be due on the 20th of the month following the end of the reporting period. So sales for September are going to go on a return due by October 20th. For quarterly filers, it's due on the 20th day of the month following the end of the quarter. Got those dates listed there and also in the chart below. Some taxpayers are set up as annual filers, and the return is going to be due annually on January 20th. So once an account is open, this is real important here, and we stress this every time we get a chance to. Once a sales tax account is opened, filing must begin even if you haven't had sales yet. It's especially common with sales tax that you want to open up a sales tax account, register for a sales tax account, because maybe you need to start stocking inventory or using that resale certificate that you're gonna automatically get when you open up a sales tax account. But your business isn't opening yet. You say you're just stocking your shelves. You're still going to be on the hook for filing based on your account filing frequency as soon as that account is open. And it's really easy to file zero if you've had no sales, and I'll show you how to do that here in a little while. Special note here, there is no option for a filing extension with sales tax. So the tax rates, the state tax on tangible personal property and taxable services is 7%. Food and food ingredients is 4%. If you have the PDF open or are viewing this later, you can click on that link from the PDF, not from the video or the webinar, but in the PDF, that's a hyperlink that gives you more information about food and food ingredients. Local tax rates, they're not higher than 2.75. You can see this screenshot here is of one of our lovely new tax dashboards. We have some great tax dashboards on our website. This is an interactive dashboard. When you click on it on our website, you can hover over each state and see the rates, but the specific rates. But you can see here, it looks like most of the state falls right at 2.75. That's the dark blue. We've got a few that what county is that up there? I don't want to say the wrong thing. Is that Washington County? It's got a really low rate, but as you can see, they vary throughout the state. There's a link if you're in the PDF to click specifically on the local rates dashboard there. So special rates, there are single article rates. There's a whole page about single article and special rates linked there, and a webinar dedicated to single article as well. Billy, do you have something to add on this
Yeah,
topic?
something just real super quick. So the rates, they're different for the local tax, right?
Right.
They're different because in the different communities, the different counties and cities across the state, when laws are passed to basically say what those rates are. So voters vote whether to increase their local sales tax or not. The maximum, like Katie said, is 2.75. It can go no higher than that unless the legislature were to change it. So as you can see with the dark blue counties, a lot of the counties have chosen to be at the maximum local rate, but others have chosen to be at the smaller rate. Just by virtue of the laws that they've passed locally. So that's real important. We're not going to get lost in the weeds on this, but just right here while we're talking about this, let's mention the fact that when you make sales from your location in one of these counties or cities on this map, that the local rate applies for where your location is. Okay. Even if you ship that item to somebody else in Tennessee at another county with a different color, okay, you stay with your rate. That's how that works. And like I say, we're not going to get too lost in the weeds on that. That gets a little deep, but I just wanted to bring it up right now. So thank you, Katie.
Uh, on that note, too, if you are an out-of-state business that's attending this or watching this webinar today, we're not going to get into reporting on the sales tax return for businesses that are not located in Tennessee, but we do have a couple of webinars related to that, and you can see in the bottom here, the bottom box on this slide, and if you're in the PDF, you can click on those links. We have a webinar that is specifically about out-of-state businesses and Nexus in Tennessee. And the webinar on reporting out-of-state sales by delivery destination is goes into specifics about how to file those sales on our sales tax return if you're an out-of-state business. Other than that, we're not getting into that today. So. All right, so the return, just some basics here. You don't have to zoom in on this screen. This is a screenshot of the way it looks on TINTAP, our online filing system. Electronic filing is required, and this is very important in this first bullet here. You have to ensure that you have access to your account in TINTAP. When I asked our call center, one of our call center managers, what are the questions that you get in our call center about the filing of the sales tax return? He said, so many people say, I need to file my return, but I don't see my sales tax account in TINTAP. Common there. There are resources out there that will help you gain access to your sales tax account, but just getting TINTAP access doesn't automatically give you access to all of your accounts. You have to, after getting TINTAP access, then pull your accounts into it, and we've got great resources for that. Special note here too, the amounts that you're going to plug in on the return are rounded to the nearest dollar. There is a link here, a revenue help article video that is specifically about filing the sales tax return, not failing it. We don't want to do that, do we? But filing it. And as well in our revenue help videos, there's a video about how to add access to your account too. How to access the return. So this is assuming you've already got access to your account. When you go into TINTAP, you're going to see, the top screenshot here. There's Katie's store, my little store. There's my sales and use tax account. And you'll see over there on the right, it says view file returns. You're going to click there, and then it'll take you to all of your returns, and you click on file now. There are a couple other ways that you can get to this. If you have a return that has generated for a period and you haven't filed it yet, there's a little special thing that says file now. You can click on that. You'll see that once you log into your sales tax account. It's pretty self-explanatory how to get to where your return is. The very first question it's going to ask you when you click on that is about vendor software. It's going to ask you if you are going to be submitting your return using vendor software, and we've got information about that. There's a link there to a page about electronic filing using vendor software and a link to a whole list of approved software vendors. A lot of you do use that function of it's great if you do. It does a lot of the math for you. You still want to verify that it's all correct, but you have to answer that question before going any further. You have to answer yes or no. If you answer yes, you are taken to a screen where you can upload that. And there's, again, specific instructions about how to do that in the link that I have posted here. If you are not using vendor software, you click no, and it takes you over to this screen automatically, which is all of your locations. I want to call to your attention here what's in red, the little red eye that's next to each location. This particular sales tax account has 2 locations. One on 500 Dedrick Street, one at 508 Dedrick Street. Those are two locations, so they're going to be 2 separate sales tax returns, but it's consolidated within one. You actually have to click on the link for each location. So that little location ID, which is where the arrow is pointing, you click on that and you can see the little red eye next to it. That means that it hasn't been completed yet, or maybe it's been started but not fully completed. Anytime you see a red eye, that means that some information is currently incomplete and must be completed. If you think you have finished filling out everything on your return and you come back to this screen and you still see a little red eye next to it, you missed something somewhere. It could have been a yes or no question or something required, though. That's another common confusion that our call center gets a lot of questions about, is people saying, I can't get any further. I don't know. It's not letting me proceed, even though I've put all my numbers in. So that little red eye is what you're looking for. That might be messing you up there if you need to go back into the return and figure out what is missing. So once you click on the location that you're ready to start filing for, it's going to ask you, do you have sales? That's a required question. You can see the little red asterisk. If you're zooming in there, you can see it next to the question. If you're in the PDF, you can zoom in and see it, but there's a red asterisk. That's required. This is where I was telling you, if you don't have any sales, if you've just opened up your account but have not started selling yet, or you have a seasonal business but you're set up for monthly, something like that. If you don't have any sales, clicking no will then proceed you through a couple questions where then you just click submit and you're done. Easy as that. If you do have sales, you click yes, and then voila, your return opens. I'm going to take a moment just to talk about another thing that our call center gets a lot of questions about. And I even remember when I first started learning about TINTAP and started practicing on filing returns in TINTAP during my training, I would get confused by this. You see a screenshot of just a portion of the return here, and I have an arrow pointed over to where you can scroll up and down through the return. That gets missed. I don't know if it's because it's so small or light gray, but a lot of people don't realize. They just see a few lines there and then they click OK and it takes them right back over there to the locations. But you actually have to scroll through the return using that scroll bar there on the right of the return. If you were to put some numbers in, whether you're done or not done, anytime you click OK, though, within that return, that blue OK button, if you click that, it takes you back to the location screen. Billy, something on this topic?
Yeah, just super quick, in the middle of this graphic here on the right, do you see the yes, no boxes, and neither one of them is checked? If you were to try to click OK, it would go back to the other screen and it would say that you have that red eye. You've got a red mark. It's not going to go. You do have to click yes or no on every single solitary question that it asks. That is a very, very common question. We're glad to help you with it. It's no problem, but it's just that just be aware of it, and I think you'll save yourself quite a bit of frustration. Thank you.
So true. That specific little yes, no that you see in the snip right here is actually the first question you get to on the return. Says, do you have any exempt transactions? And I see there's a little snip of that right there. That's one that is required. You have to answer yes or no. When you answer yes to that, it brings up that schedule. So we'll talk about that here in just a minute. Okay, so line 1 of the sales tax return, the most important line. And when I was talking to our subject matter expert, Auditor Justin England, about this topic back earlier this month when we were putting the presentation together, I said, what's the number one thing that people miss with the sales tax return when you're doing audits? And he said, what to include in line 1. So bam, it's the very first thing is the most misunderstood, right? So we're going to go into a little bit about what you do enter as your gross sales. It is the total amount of sales that you have, excluding what you collected in sales tax, because the return's going to do that for you, and you sure hope it matches up with what you collected, right? But what is included in gross sales? You're going to include your cash sales, your credit sales, conditional sales, sales exempt from the tax, because you're going to exempt those out later. Leases and rental of tangible personal property. Leasing and renting, TPP, is in Tennessee sales tax law looked at the same way as selling. Leasing, renting, selling, sales. Charges for fabricating personal property for consumers, sales of specified digital products, and taxable services. And again, for more information, I saw some questions about this in the questions that you submitted with your registration to attend this webinar. What services are taxable? Again, we have a webinar about that a few slides back. There was a link to it. We've done a webinar about services subject to sales tax, and there's great information in our sales tax manual about that. So other lines on that main return, once you open it up, the very first line says gross sales. The next few lines you're going to plug in, you're going to enter information for if they pertain to you. After that, the rest of the stuff on the main part of the return auto-populates based on what you plug in on the various schedules. But here, lines 1 through 1, 2, 3, 4, 5, 1, 2, 3, and 4. So line 1, gross sales. Line 2, that's where you're going to enter the cost of TPP that you have purchased without the payment of without paying sales tax. So you've used your resale certificate, but let's say you didn't end up reselling it. You ended up using it in the course of your business. Didn't sell it, but used your resale certificate for it. That's where those items are going to go. Hey, Justin, you got something to add to this?
Yeah, and I just want to kind of, you touched on it a little bit, but I just kind of want to reiterate, a lot of these lines that we're going to be going over may not pertain to your particular business or your client that you're filing for. But, don't let that worry you when you're going down through there and you have zeros there, because there are a lot of those that, the typical person isn't going to use. And in particular, like, just to give an example of the line 2 that Katie was talking about, that's for, like, if you say you're a grocery store and you pulled a case of toilet paper out of inventory to put in your bathroom there within the store. That those types of things are what's going to go on that line 2 right there.
So Justin, they're going to put the cost of that item that they paid for it. Is that right? That's where they're
Yes, they would put that the items that go there would be the cost that you paid for it whenever you purchased it from your supplier, not the cost, like, not what you
right.
would sell it for to your customer.
Not,
Yes.
you're not upcharging yourself.
Right, right, right.
Okay, great. And likewise, thank you for adding that in, Justin. Likewise, there, lines 3 and 4. 3 is the cost of TPP purchased or imported from out of state, maybe online purchases, but for use and consumption when no sales tax was paid. Line 4 is a lot of times used by contractors. It's the fair market value of tangible personal property that's fabricated, produced. In addition, the purchase price of or fair market value, whichever is applicable, of all property furnished to or used by contractors when the sales or use tax has not been previously paid. So I'm going to go back here. So after those first few lines, it's going to go ahead and calculate total tax due on total sales there on line 5. Everything else that's on the main section is going to start adjusting based on what you put from here on forward. First big area, and this is what Justin told me was the other big confusion that a lot of taxpayers have, is where to exempt things out, and that is with Schedule A. And when I showed you the slide about scrolling and stuff, this is an example of where you're going to have to answer either yes or no that you have exempt transactions. So we're just going to kind of work through what is an exempt transaction here and where do you put that. The exempt, it also includes where you're going to put food and food ingredient sales. And as you can see, that's line 1 here. Let me just side note here, you can see a link here in our sales tax manual. It's chapter 18 is all about exemptions. No matter what you sell, I'm going to recommend to you that you go read that chapter in our sales tax manual, because this schedule doesn't just include exempt items. This is where you're going to put if you've had returned merchandise. I don't know that there's a business that sells anything out there that hasn't dealt with having something returned, right? Sales and interstate commerce, we'll go over that here in a minute, but there's other things that you may not think are considered exempt. I'm just going to recommend there to everyone to read chapter 18 in our sales tax manual. But let's go through here. Line 1 is where you're going to enter the sales of food ingredients. Line 2, this is a very well-used line as well. This is where you're going to include all sales which were made to vendors or other establishments for resale. So this is when someone comes into your location and uses their resale certificate to buy something exempt from sales tax, because they're going to resell it. The second bullet here over on the right of this slide, it says, don't forget to maintain copies. Very important there. If someone provides you a exemption certificate, whether it's for resale or some of these other things, government, nonprofits, you need to verify that it is valid. You're going to look at the date on that exemption certificate, make sure it's in date, and then save a copy of it. Justin?
Katie, I just wanted to chime in here. This, what you just spoke to is another really common audit finding that we see. Those exemption certificates need to be obtained from your customers prior to you making that sale exempt from sales tax. I can't tell you the number of times that we've went in, conducted an audit, and this be the major finding where they exempted these sales, and it looks like, from what we can tell, it looks like, that should have been, most likely was a business purchasing things for resale, but you have to be sure that you have those valid exemption certificates before you make that sale, because without those, you are still responsible for the tax on those sales.
And that goes for Justin, line 2 there. So the resale certificate, you see line 4, government and qualified institution sales. So nonprofits, government,
And
they show you that certificate. Ag sales, line 6.
and a thing to keep in mind, the retailer or the dealer, as the terminology the department uses, is responsible for the tax on sales unless you have this documentation to back up the exempt sale. So one of the most common findings we have is this, dealers or taxpayers don't have the proper documentation. And it goes with any of these, even, with sales and interstate commerce. Really any of these lines, you have to have documentation to back up why that sale was made exempt from sales tax. And in our manual, our sales tax manual, it does go into detail about the different types of documentation that we're looking, that we would look for that needs to be kept by the dealer in those instances.
So Justin, if I'm hearing you right, you're saying if there's an audit conducted and you see that they have put sales on one of these lines where a certificate is required, but they're not presenting you, they haven't maintained a copy of that certificate, that the dealer is going to be responsible for sales tax on that.
Yes,
Is that what
yes,
happens?
the dealer will be responsible for that sales tax.
We don't want that to happen. They didn't pay it.
Absolutely not. Absolutely not. We just want to make sure
No.
that you're paying your fair share, and but in those instances like that, if you don't have the proper documentation, then it is held on the dealer.
And it's
as
as
to
simple
whether
as
they're
just making
responsible for
sure that
paying it.
when they say, hey, I don't have to pay sales tax, here's why, they show you that certificate, you go make a copy of it.
Mhm.
Have a special file somewhere where you're keeping that.
Yep,
Yeah, okay.
absolutely.
So the lines on this exempt transactions that pertains to, where you're going to have to accept or get a copy of an exemption certificate, is going to be sales to vendors, line 2. Let's see, I'm not sure about SNAP benefits. I don't know if you know about that one, Justin, but I know government qualified institutions.
On those, oh, sorry, I should have started.
No, go ahead.
Okay.
Yep.
On those SNAP benefits,
Mhm.
the way those are paid to the retailers, those benefits come in directly to their bank account. Typically, at least this is what I've seen. They come in directly from the government, and it's actually labeled as, I can't remember if it's SNAP benefits, but it's labeled to where you can tell on the bank lines that those
Okay.
are what comes in. So that's typically the backup on those that
That's
will
right.
look
It's an
at.
actual card that's being used, like an
Right,
EBT
right. Like
card. Right.
you can tell like that this amount
Okay.
was each month was purchased with using one of those cards.
Right. Nothing that the dealer has to retain. It's just
R-
going to show that
Right,
as the sale, that type of sale, like
right,
kind of card.
correct.
Gotcha. Other exemption certificates that you're going to need to maintain if you're a dealer and are presented with one, a machine and ag sales. Right now, definitely check the dates on these certificates and make sure they're valid. All right, so kind of hopping around here on the lines a little bit, but we're going to talk, move on down to line 5, returned merchandise. This is where you're going to enter an amount of taxable items that have been voluntarily returned by the purchaser, but have been included in gross sales either on this return or on a previous return, because they may be returning it a couple months later, right? If you allow that. You're not going to include repossessions. That goes on another line, and that's a hairy line right there. But so we talked a little bit about machine and ag sales, line 6, again, maintain those certificates. Sales in interstate commerce, line 7, Justin mentioned maintaining records on this. This is where you're going to sell something where the purchaser acquires the product out of state. Now, this is not where someone comes into your store, they happen to live in another state and tell you that if they're walking out of your location here in Tennessee with it, that's not a sale in interstate commerce, even if they're taking it to another state. It's where it's delivered out of state. Hey, Justin.
Sorry, I'm got to add my 2 cents in, Katie.
Add it all
Um,
in, add it as much as you can, because we want to hear what an
there
auditor
is
has to say.
there is an exception
Okay.
in a particular industry when it comes to that line. Whenever we're talking car dealerships,
Hmm.
a car dealership can sell a motor vehicle, and there's an affidavit. It's called an affidavit of 3-day removal that I'm pretty sure there's a copy of it on our website that you can get.
Yes,
Most of them in
there
the
is.
business are going to have it. Um, the cars like that, motor vehicles that are going to be registered in another state, are the exception to that line. Even if it is obtained from your dealership here in Tennessee, if you have that that record of that 3-day affidavit,
Okay.
that will stand as still in interstate commerce. A common thing, and I hate to jump taxes here, but a common misconception with that particular line, the law is different in between the two taxes of sales tax and business tax. Those 3-day affidavits don't cover a car being sold out as an out-of-state sale when it comes to business tax. That is another common error that we do see. But for sales tax
Interesting.
purposes, if you have that 3-day affidavit, it does count as a sale in interstate commerce.
Interesting. Okay. I've never heard that before. So good. So over in business tax, you still got to count it towards your,
Yes.
it's not a deduction there, but it is here.
Yes.
Okay, so just to recap that, and thank you for adding that in, Justin. So sales and interstate commerce, unless it's a car dealership that has the 3-day, that can maintain copies of that 3-day affidavit, then anything else when it's delivered out of state, this is where you're going to put those sales. So a lot of online businesses, this is going to pertain to you, where you've got internet ordering, anything that's delivered out of state, you're going to put that here. Line 8, repossessions, we're actually not going to go into that right now. It's a pretty complicated line that could stand to have a whole hours or longer conversation about just repossessions. But I will tell you, if you are a dealer that deals with this, specifically a lot of motor vehicle dealers deal with repossessions, something to look forward to. We are going to soon be having an industry specific tax manual just for motor vehicle dealers. And soon after that, we'll have a webinar pertaining just to motor vehicle dealers where we will go into more detail about repossessions. Don't want to get lost in those weeds right now. So line 9 of the Schedule A is where you're going to enter deductions that are not included anywhere else on Schedule A. include taxable sales subject to special state tax rates such as water, energy, fuel sold to qualified manufacturers. Lots of details here, but I'm going to refer you over to the sales tax return instructions for more information about what other deductions might be. Now, this is something new. Line 10, temporary exemptions. We have just now added this in. They're just year after year, lots of temporary exemptions, right? And those are a good thing for taxpayers and people that live in this state. But we've made it a little bit easier for you to report those. It gets us out of alphabetical order going through these schedules, but there's at the top of the Schedule A, there's a little box that says, do you have, or click here to report any temporary exemptions. Click here, the little blue click here button, and that will open up a little schedule for you. Beginning July 1, 2023, this schedule can be completed by any taxpayer who's claiming either the sales tax holiday, food sales tax holiday, or the broadband infrastructure exemption. Now, if you want to zoom in there on the Schedule G, the first area that you see there, that's where there's a drop down. You don't see a screen. I don't have that in the screenshot, but if you just click into that field, a drop down will appear where you can click on one of those 3 temporary exemptions. You're going to enter the amount in the next area, and then the area on the right there will auto-populate based on the math of what you've put in the first 2 areas, and that will feed into the rest of your return. So temporary exemptions, that's a new thing. Hey, Billy.
Just real quick, for food sales tax holiday, as we record this today on October 31st, today
Oh,
is
yeah.
the last day for Tennessee's food sales tax holiday. So just a point of reminder there for you. So these October returns and really returns that might even be quarterly could have these as well as annual returns, which is sort of
Right.
obtuse. But anyway, the point of this is that the sales tax holiday does end today as we're recording this presentation today and presenting it.
I'm going to go shopping right when we get done. All right, Schedule B, local sales tax. You're going to use this schedule if local taxable sales do not equal the state taxable sales. This can occur if there's things like energy fuel sales, single article sales, which are in a nutshell sales of items that cost more than $1,600 just for just a single unit. I don't want to get too lost in the weeds here. I will tell you line 1 of this is auto-populated. The adjustments are auto-populated from the Schedule A that you just completed, those exemptions. One thing that I want to point out here is the excess amount of single article tax base, line 4. We're going to talk about that on the next slide and go into a little bit of detail about that. We do have a webinar, like I mentioned earlier, about the single article taxes. But in that webinar, I didn't really go into a lot of detail about how to report it on the return. So I'm going to take just a couple minutes to do that for you here in a minute. If energy fuel sales applies to you, this is where you'll enter that. Line 6, other deductions. This is where you're going to include taxable sales of specified digital products subject to the 2.5 local tax rate and sales of merchandise made through vending machines. And again, if you've got any questions as you're going through the return and looking at it, the little blue eye that's out beside each line can tell you a little bit more information. That local sales tax rate you see on line 8 there. So for the dummy return that I made up for this Katie's store business, it's located in Nashville, right? So that's 2.25 there. That rate is going to be based on your location. Billy mentioned this earlier. It's real important that you've got your location address right. If you see anything off with that when you get into the return, stop, contact us, we'll get to the bottom of it and fix that, because it's real important that that get allocated, that's reported correctly so that it can then get allocated back out to the local jurisdiction correctly, and that it's all getting charged right? Okay, this is where we're gonna veer off for just a minute about single article. This was line 4 of the Schedule B. So single articles, the example I have here is a car. That's an obvious one, but it can be a ring, a piece of clothing. This day and age, I don't know, a purse, a piece of furniture. Lots of different things can count as a single article. but it's taxed a little bit differently. And as long as you plug things in right, the return will do the math for you. Back in the olden days when we had a paper return, this was a lot more complicated. But now, really, what you're having to do here for this Schedule B is put the amount here in excess of the single article base. So for the example that we're using here, we've got a $25,000 car. Okay, the entire car is going to be taxed at the 7% state rate. The first $1,600 of that purchase price is going to be taxed at the local rate. In this example, for this business, it's 2.25. All right. The next 1,600 up to 3,200. So since the price of this car is over 3,200, the whole 1,600 is going to be taxed at the state single article rate of 2.75. But for Schedule B, line 4, you're going to put the amount in excess of the base. So in this case, we're subtracting 1,600 from the 2,500, and you're entering 23,400 on that line 4. If you're a business that has lots of single article items that you sell, maybe a furniture store or jewelry store, car dealer, then it's recommended, if you don't have software that already does this for you, just keep good track of the single article sales that you have, and do this math so that you can then come up with what to put on Schedule B line 4 there. All right. Going to go off that tangent. Oop, unless Billy got something to add to single article there.
Oh, I was just going to point out something that should be pretty obvious. If you don't put that excess in correctly on Schedule B line 4, your local tax, which is calculated further down, I think, what is it, on line 7? So I'm trying to read that.
Yes.
Is going to be grossly inflated. So you definitely don't want to do that. You'll see something that looks like, what? You know, how much tax is that? Yeah, that's the reason why. So just be real careful with it. And after dealers that sell these vehicles and these expensive items, you know, do this after a while, it becomes a little bit second nature. So
Right.
you'll get there eventually.
All right, so Schedule C. Here I've got a screenshot. I don't expect you to read that. This is not going to apply to very many people. We're looking at the state single article in the special rates schedule. So line 1 is where you're going to enter the total sales that were from 1,600 to 3,200 for single articles. So if you have sold any of those higher items, that's where you're going to enter all that in. And notice real quick, let me back up at the top, you're going to have to answer yes or no there. But let's see, a lot of these lines on Schedule C are auto-populated. If energy fuel sales applies to you, if aviation fuel applies to you, sales of water carrier energy fuel, like I said, a lot of kind of niche items that are on this Schedule C. I'm not going to go into a whole lot of detail on this one, but if those scenarios apply to you, more information about these lines in our manual as well. Okay, D, E, and F, other schedules. So again, the sales tax return can look like it's a mile long, right? But a lot of this is not going to apply to most people. D is only completed by certain businesses that are in the downtown Nashville area that are subject to the central business district fee. You know it if you're in that area, and it will a lot of that auto populates too based on your location, your address location. Schedule E is the schedule for out-of-state businesses. Again, we have a whole webinar dedicated to that, which is out-of-state businesses and sales based on delivery destination. You want to look that up if you're an out-of-state business. And Schedule F is new. Fairly new. It's new over the past couple of years, and it's for short-term rental unit marketplaces that collect occupancy tax for their units. So Airbnb, VRBO, it's specifically just for those types of businesses. So we're not going to go into detail about that right now either. A brand new schedule as a result of this most recent legislative session is the Schedule H, hemp-derived cannabinoids. More information about this in our manual, pages 78 and 79, but it's just a yes/no question. If you have hemp-derived cannabinoid sales to report, you'll answer yes or no. And similar to the Schedule G, which was the temporary exemptions schedule, there's just it's like a little worksheet where there's a drop down in the first area where you're going to say which type of hemp-derived cannabinoid you had a sale in, enter the sales of that product in line 2, or sorry, area 2, and then the amount of tax owed. Now the 6%, that's what the law says. It's an additional 6% on all of these hemp-derived cannabinoids like Delta 8. Additional 6%, and that is, when I say additional, that's in addition to sales tax. So filling out this schedule will populate that for you and generates over on line 17 of the first page of the main page. Yes, Billy.
Mr. Annoying here. So the one thing I want to point out on this is something that may or may not be apparent to the dealers that deal with these hemp products. Be specific in the schedule about the type of product that you have sold. And even though the tax rate is 6%, there's a back end to this thing that says, your store is subject to an inspection to make sure that you are reporting the tax right and that your products are legal and all this other kind of stuff. So what might happen is they might look at your sales tax returns and say, okay, you sold X number of Delta 8 products, but your inventory doesn't show that, it shows out of skew. So in other words, pick the right category is what I'm saying. So that's really about it. I just wanted to point that out, just to be as specific as you can be on that.
Well, in the law, you're right. The law is pretty specific. You can see from that drop down there, there's several different types of items. Go to our sales tax manual for more information. It's pretty scientific, these types of items that are hemp-derived cannabinoids. So it's new for all of us. We're planning on having a webinar dedicated to this topic next in the first quarter of 2024, so in a few months. I'm going to kind of hurry up just a little bit here. Oh, yeah. Hey, Justin, let me go back
Really quick, Katie. I just
Sure.
wanted to reiterate here. This is not your topical type products that,
Right.
like your lotions, things along those lines. Look in the new law and I think there's an important notice out there regarding this. I have seen some confusion with people that sell like those CBD type lotions and things, thinking that they would have to charge this as well. But it is specific to certain types of products. I would encourage everyone to go out there and do their research, just make sure they're treating those appropriately.
I wonder what the ones you give to your dog. We got them for my dog one time, so he wouldn't freak out. I wonder if those are subject to tax. I have to look that up. All right, so submitting the return. I don't want to fly too fast through this because it's important and a lot of people miss this. I want to call a few things to your attention on this page. The top snip is of that locations page of the return. If you'll notice on the far left, what used to be little red eyes, that meant something was incomplete on that return. That little red eye is gone now next to both of my locations. That means they're good, okay? That means they're good to go. I've completed everything, hopefully correctly to reflect my numbers right. But if you see a little red eye still there, you got to go back in there and find out why. Usually it's a yes/no question, but both of my locations are good to go. I'm going to click next here and it'll take you to a summary page. Click next if everything looks right on your summary page. The next one is an attachment page. Most people don't need to, most people don't ever click attach attachments. Attachments from your software vendor go at the beginning. That's different, but this is just attachments. I've never seen an attachment to a return. But then click next, and then you're going to have the opportunity to click submit. If you want to zoom in here a little bit, this is the payment page. It's going to ask if you want to pay by ACH debit. If you click yes, it takes you to some information there. If you click no, you don't want to pay right now, you can still submit a return without payment. Now, if you don't pay by the due date, you're going to get some penalty and interest, right? But you have to click the submit button. Very important. If you're not ready to submit it yet, you can save your draft. You see an option there on the left-hand side of both of these snips where you can save a draft and you can go back into that draft. But unless you click submit, the blue submit button, and it'll prompt you to put your 10-tap password in, it is not submitted. A lot of people will save a draft and think it's submitted, but it's not. So common mistake there. By the way, we have opened up the chat since we're kind of running a little bit low on time. We want you to we may get a few minutes for some questions. If we don't, then we'll tell you how to send us a message for those questions. You can view, print, and amend a return. Here's instructions here to make any necessary changes to returns. If you do amend a return and it results in either you've paid too much or you paid too little. If you've paid too much after the amended return, you can request a refund on 10-tap. It's a pretty easy process, fairly easy process to go through, just a couple of clicks to request a refund on 10-tap. You may owe additional tax after amending a return. If so, there may be a little bit of penalty and interest if you amended that return after the due date. All right, going to share a couple resources here with you. There's links to our tax webpage. You see the different, the menu for our tax webpage. That's the snip that, see if I can do this, is right here. Yeah. Our tax manual, click on the link to that right here. Our revenue help articles, lots of revenue help articles. The link to that, you can see that we've got, I think, over 100 revenue help articles about sales and use tax, and then a ton of videos that we've already, lots of topics we've already had webinars on. You can see this is just a few of them on sales tax topics. I'm going to land on this page for a minute here. Dan, Billy, Justin, while I've been yapping the past couple minutes and had the chat open, if y'all want to join us here and have a few minutes to go through any topics or any questions that you see in the chat.
I did see one thing quickly, and this may be a common question, but sales are reported at the time the sale is made in the month that it's made, not when you actually collect the cash for that sale. It happened to be the first question I noticed whenever I opened up the chat box. I just wanted to cover that.
That's a great question. Yeah. So for the gross sales line 1, it's when the sale is made.
So, yes, absolutely. One real basic thing that we've put in the chat a couple of different times, but I think a couple of people missed it. The recording of this webinar will be posted tomorrow in our webinar library section. So it'll be there. Katie will make sure it's true. And if it doesn't happen, it's Katie's fault. Don't forget. Okay.
It is recording.
You guys are asking like a ton of questions, and just to let you know, it's like 800 to 3 is the ratio. So it's not going to happen. We're not going to be able to answer all your questions, and we do apologize for that. We do want to, but if we can't get to your question here today, make sure you're using the tools that you have here. Our call center is available. They've been put on notice that you guys might call and have some questions too. Please do. So here's something unusual about our call center real quick. We answer the phone. Absolutely answer the phone. How about that? That's weird, right? You're thinking, oh, I'm going to be on hold for 10. No, you're not. Unless it's April 15th, right, Katie?
Yeah, don't call us on April 15th.
Well, try not to anyway, right? Because we are, turns out, real busy about that time. Our email support, my team that handles email, it does a phenomenal job, and we'll be glad to respond to you as well, too. Justin, what else are you seeing out there that we can pop on?
I'm trying to read through, but every time I start reading a question, another one comes in and it scrolls me out from being able to see it. So I'm trying to read through quickly, anything just quickly that we can answer. I will say, I don't think, I did see one question. I don't think there's any hard copies of this, of the sales tax manual, but I think it is printable if you pull it up on the website. If you
better get a lot of paper in your, in your printer.
It's a few hundred pages, I know.
Yeah, what you might want to do is just download it to your computer and save it as an icon.
Yeah, and if you leave it in electronic format, you can do the Control F and search it for certain things.
Right.
It's also handy to do.
Dan is making an
appearance. Someone has a practical question. I have 75 locations. Is there any way to import my information so that I don't have to fill out each one individually? What's the answer to that?
If you have software that allows you to do that through a private software company, that would be available to you. uh, per the question that is asked right before you get ready to file, do you have do you wish to import information? Yes or no? And then that's how you do it. But if you don't have that software, unfortunately, you're going to have to key that in. And that takes a while too. I saw another question in chat too about, well, what if I have an old location? What do I do about that? You need to contact us. Okay. You can close that location on TINTAP. And if you don't know how to do that or need help with it, make sure to reach out to us and let us help you close that location out. We don't want you to have to keep filing, let's say, a 0 return for a location where you're not at anymore. And that gets back to one question just real quick on registration. It's so important to register properly when you start your business. It's equally as important to end your business properly at these different locations. We cannot just have people saying, hey, I'm out of business. So I'm out of business. I'm just dropping everything. I'm not doing anything anymore. No, it doesn't work like that. You've got to finish this thing out right. You've got to let us know that your business closed. You got to let us know that your business moved. We do not have a crystal ball. We kind of joke about that, but it's true. We don't know until you tell us. Okay, and our collections division is really good about trying to collect on assessments that we make on overdue returns. You don't want that. You don't want to pay any extra money to the government. We're not about that. We're about doing it right. So we'll help you. I promise. Even if you get backwards, reach out to us so that we can help you. Okay.
And another question here I've seen that we did provide a link to the PDF of the slides at the beginning of the chat. You should be able to go back and see it. Also, once the webinar is posted onto our website, there is a link there that has a PDF of the slides as well. Is that correct, Katie?
Yes, it's
Okay.
there now. I've seen a couple questions pop up about, does the 3-day affidavit apply to trailers? Actually, just as of this year, legislation that passed this year, the 3-day affidavit does now apply to trailer sales as well.
Correct too. I saw one that came up about, sales being, why do I have to pay sales tax on a car? It's already had sales tax paid on it because it's a used car. That's because, very simply, sales tax is transactional. Okay, so every time an item of tangible personal property is resold, there is sales tax due on that unless it's otherwise exempt. So a used car could be sold 8 different times, right? And 8 different times sales tax is paid on it based on the sales price of that vehicle at the time that it's sold. Okay, so good question, but something that we get quite often. Any other questions hit anybody's radar there?
Sheldon entered a question here. What is your responsibility as a dealer if a customer presents an exemption certificate, but I do not think the products qualify? As the dealer, the way the Tennessee law reads, you are not technically responsible for, judging if that product will qualify for the exemption or not. If they provide that exemption certificate, the due care is on the person that provided the certificate, not on the dealer that accepts it. As long as you have that, then, like I say, it's an agriculture card. It actually states on that card, it's the farmer or the agriculture producer to make sure that what they're purchasing qualifies. So your biggest concern as a dealer is to make sure that you have an up-to-date and what's the word I'm looking for?
Valid
Up-to-date
certificate.
and valid certificate. Yes.
Mm-hmm. Someone mentioned on here looking for a valid, making sure an exemption certificate, the date on it is right. You're right. The resale certificates do not have an expiration date on it. Most of the other ones do, but that resale one, you're not going to see a date. But you can check on our TINTAP site. You can check to see if a certificate is valid.
Something super quick about, excuse me, about governmental exemption certificates. They are not officially issued by our department. They are generic, and the governmental entity, the federal government, the Tennessee state government and its agencies and local governments use a generic certificate that is on our website, and they handwrite that in. Now, of course, when you're accepting those funds, you want to be sure that they're being paid directly from a governmental source, like a credit card or a check or a purchase order or something like that. Okay. Because you don't want those funds coming from one particular individual. They need to come from the government, if that makes any sense.
Y'all, we just ran out of time. This is a lot of information and we just touched on the basics. So hopefully this has been helpful to y'all. Thanks for joining us. Big thank you to Justin for being our special guest this month.
Yes.
We want to have you
Thank you,
back
Justin.
again.
Thank you very much.
A couple of things here. We've got our, let's see. We are actually, I didn't make this change. We just switched. We're going to have next month, our webinar is not software as a service. We've switched. That's going to be in December now. In November, our webinar is going to be updating your account in TinTap. So big one there. We've already reflected that change on our website. Another new business workshop on January 10th. And please take a moment to complete the survey. When you leave here, it'll pop up. If you need CPE credit, it'll ask you that, and you can click yes or no there. And just a brief, how was this webinar? And if you have any ideas for topics that we can have a webinar for in the future, please add that there too. Guys, y'all have anything else to add before we leave here?
I was just going to say real quick, join us for new business workshops. If you're a new business, hit us up in January on our quarterly workshop. Let us help you. We get way more basic in those, and we can help you across all of our different tax types. So if you're a new business owner, don't be afraid to sign up for that. You can't beat the cost. Free is for you, right? And for us. So
Right.
we're glad to help you out.
All right. Well, if we don't have anything else, Justin, again, thank you so much for joining us and helping get this prepared. And we will see y'all next month at the tax seminar, which is making adjustments and making changes to your tax account. See y'all then.
Thank you, everyone. Bye.
Thanks, everyone.